They just dumped 4 million ounces in 36 minutes on a Tuesday morning while you were drinking your coffee. JP Morgan, the same bank that paid $920 million in fines in 2020 for rigging this exact market, did it again, and this time they got caught with their pants down at $90 silver. Ladies and gentlemen, Asian guy here, what I'm about to show you is not a theory, not a guess. It is the smoking gun, time-stamped, volume confirmed, tape printed in the public record. 4 million paper ounces hit the bid between 8:42 and 9:18 a.m. Eastern. No news, no Fed leak, no catalyst. Just one coordinated avalanche designed to do one thing: break your hands before silver punches through 90 and never looks back. But here is what they didn't count on. The trap they built for you is the trap they're now standing in. Every ounce they dumped this morning has to be bought back at a higher price from a market that has run out of sellers. The ambush failed. The ambushers are bleeding. Stay with me. This gets darker. The body has been found. 8:42 a.m. Eastern Hard, March 10th, 2026. The COMEX silver tape lights up red. Not normal red. Surgical red. Algorithmic red. The kind of red that only prints when one entity throws every chip they own at the market in a single push. In 36 minutes, 800 contracts dumped, and then 200, then 2,000 more in a single block at 9/11. By 9:18, the tape recorded 4 million ounces of paper silver flooding the offer side. 800 contracts, synchronized, stacked, detonated. At $90 spot, that is $360 million of notional silver hitting the bid in half an hour. There are not 12 entities on the planet capable of moving that volume that fast. Maybe 3. And we already know which one, because the CFTC's COT report last Tuesday named them. JP Morgan is the largest of the 4 big commercial shorts. They threw 4 million ounces at the price. The price moved $2, 2. A normal market drops $7 on that volume. A normal market panics. A normal market gives the shorts what they came for. This was not a normal market. Silver absorbed the entire dump, then bounced. As I record this, spot is 90.40 higher than the price they tried to break. The body is on the floor, but it isn't yours, it's theirs. And here is where it gets darker. The dump didn't fail because retail bought it. Retail doesn't have the firepower to absorb 4 million ounces in 36 minutes. The dump failed because the buyers on the other side were sovereign, Asian, industrial, physical. JP Morgan dumped 4 million ounces of paper, China bought 4 million ounces of paper, and then China stood for delivery on every single contract. That is not market manipulation. That is unilateral surrender disguised as aggression. Let me read you a confession. September 29th, 2020, Department of Justice, press release 20/10/18. JP Morgan Chase agrees to pay $920 million in connection with schemes to defraud precious metals markets. A $920 million fine. 3 traders criminally convicted. Michael Nowak, head of the desk, sentenced in 2023 for racketeering, the same statute used to prosecute the mafia. That is not a metaphor. That is a court record. JP Morgan's silver desk was legally classified as a criminal enterprise. And this morning, March 10th, 2026, that same desk dumped 4 million ounces of paper silver in 36 minutes. Connect the dots. This is not a hypothesis. This is recidivism. A repeat offender on probation caught on tape doing the exact same crime they paid nearly $1 billion for last time. The fingerprints are forensic. The pattern is identical. But the cover-up is bigger than the crime. Because look at where the metal came from. JP Morgan does not own 4 million ounces of free, unpledged silver in their COMEX vault. Nobody does. Total registered COMEX silver sits at 38.7 million ounces, down from 88 million last summer. So how did they dump 4 million ounces? They didn't dump silver. They dumped promises. They sold paper they cannot deliver. They sold the alibi before they sold the asset. You are watching the crime in real time. The tape is the evidence. The body is the bank itself. Do the math with me. 4 million ounces dumped. $360 million in notional value. JP Morgan posted roughly $50 million in margin to load the cannon. Silver did not break. By 1 p.m., spot is 90.40. The shorts now mark fresh position to market, 4 million ounces at 87 average, sitting at 90.40. $13,600,000 vanished in 4 hours, just on today's failed ambush. JP Morgan's full commercial short is roughly 130 million ounces. Every single dollar silver climbs costs them $130 million. $1. Move silver from 90 to 91. JP Morgan eats 130 million before the donut hits the desk. Now multiply. 91, 130 million in losses. 95, 650 million. 100, $1,300 million on the JP Morgan book alone. And that is just one bank. There are 8 commercial shorts, total net short between 300 and 350 million ounces. At $100 silver, the cumulative cartel loss is between $3.5 and $4 billion. This is what a death spiral looks like in math. Each defensive dump shrinks the ammunition for the next defensive dump. The 4 million ounce dump today wasn't the kill shot. It was the white flag fired from a cannon at point-blank range. And the cannon is now empty. You were right. Yes, you watching this right now. Your father-in-law mocked you at Thanksgiving. Your friends laughed when you opened the safe. Your financial advisor told you silver was a barbarous relic, a pet rock, an obsolete idea. This morning, that system dumped 4 million ounces of paper at 8:42 a.m. trying to break your conviction. You did not sell. You held. You held when silver was $26 in 2022. You held when CNBC laughed at Reddit silver. You held when your own family begged you to dump the stack. You broke them. The bullion banks built a 40-year empire on one assumption, that retail would always blink first. That assumption died this morning at 9:18 a.m. Eastern. The 4 million ounce dump was their last full-clip Hail Mary. The answer the market gave, the answer you gave, where it was a $2 dip and a full recovery in 3 hours. You held the line, you broke the cartel, you won. But the vindication is just the beginning. Shanghai opened at 9 p.m. Eastern last night. By midnight, the SGE silver premium had spiked to 4.20 over London. By 4 a.m., 5.10. By the time JP Morgan's traders sat down at 7:30, Shanghai was already bleeding the West dry. That is the context for the 8:42 a.m. dump. JP Morgan didn't dump because they thought they could break the price. They dumped because they had to slow the bleeding to Shanghai. Every dollar silver climbs in New York is another dollar of arbitrage premium dragging Middle East. They tried to flatten the curve. The curve flattened them. This is no longer a market. This is a war, and the front line is not Wall Street. It is the Strait of Malacca. This is the London gold pool of 1968. Repeating itself in 2026 with silver instead of gold, with Beijing instead of Paris. There is 1 ounce. There are 9 claims. 8 people will go home empty. JP Morgan dumped 4 million ounces this morning to slow the bleeding. They didn't slow anything. They just gave Shanghai a discounted entry on the next 4 million. But the trap snaps shut here. JP Morgan has 2 options. Both destroy them. Option 1, keep dumping paper. Every dump requires fresh margin. Every failed dump bleeds capital. Within 21 days at this burn rate, their own risk officers shut the desk down. Option 2, go to the Federal Reserve. Tap the standing repo facility. Borrow taxpayer-backed cash to keep posting margin against a position they cannot close. The moment they do, every macro fund on Earth knows the silver squeeze just got officially backstopped by the U.S. government. To save themselves, they must print. To print, they must devalue the dollar. To devalue, they must push silver higher. To push silver higher, they must bankrupt themselves. It is checkmate, not in 20 moves, in 3, 5 steps, non-negotiable. Step 1, Thursday, 8:30 a.m. Eastern. Watch the H4.1 release. If the standing repo facility prints above 5 billion, JP Morgan tapped the window. Green light. Step 2, watch COMEX delivery notices at 3 p.m. daily. If they exceed 4,000 contracts, the vault math collapses by Friday. Step 3, watch the Shanghai premium at 9 p.m. Eastern. Above $6 and the New York paper price chases. Step 4, watch dealer premiums on Silver Eagles. Above $8 over spot, the wholesale market is breaking. Step 5, if you see a paper smash on Tuesday, do not panic. Do not sell. The smash is the dinner bell. Add with both hands. Do not lever. Do not buy weekly options. Hold physical. Hold the streamers. Sit, watch, wait. The greatest wealth transfer in human history is happening right now while you watch this video. Wealth is never destroyed. It is transferred. From those who hold paper promises to those who hold real things. When silver hits 100, do not sell for dollars. Selling silver for dollars in 2026 is trading your lifeboat for a deck chair on the Titanic. Leverage it. Trade it for productive land. Trade it for businesses. Trade it for tools. You are not buying silver anymore. You are accumulating leverage against a broken regime. I am Asian Guy. This is John Funds AG. And the silver squeeze has only just begun. Thursday, March 12th. The Fed releases H4.1. We will know if the repo facility was tapped. I will be right back here breaking down what happens next. Like it. Share it. Subscribe. We are not investors. We are the line that did not break, and the line collects on Monday. See you on the other side.